Today on World Business, gold is glittering once again, soaring past the $4,000 mark and rekindling questions about trust in the global financial system. Investors are turning to the world's oldest safe haven amid shifting economic landscapes, rising geopolitical risks and fresh doubts about the stability of other assets. As markets absorb the latest data from the US Federal Reserve and Asia's central banks, the question is clear. Is this a surge, a hedge, or a warning sign? And later, from bullion to budgets, we turn to France, where the government's ambitious Zucman Tax proposal has reignited a debate over wealth fairness and fiscal responsibility. With Paris facing one of the highest deficits in the Eurozone, President Macron's team is looking to raise billions through a new levy on ultra-high net worth individuals. But can this measure close the gap, or will it spark capital flight and deepen economic uncertainty? Two stories then of value, volatility and vision, all shaping the world's business agenda today. First, let's take a look at this report.
The price of bullion, which typically performs well when interest rates are low, has risen by more than 50% in 2025. Investors are flocking to buy it. But what's driving the latest gold rush? Rising interest from investment funds has been a major factor behind bullion's price moves. Sentiments driven by market trends, news and global events can fuel speculative buying or selling of gold. Gold is considered a safe haven, which investors seek out at times of increasing global uncertainty. And there's no shortage of that right now, according to Veronica Brown, Reuters global industry editor for metals and mining.
I think an awful lot of what we're seeing is about fear right now. If you think about gold as a mirror onto the rest of the world, you could really describe it as being the sum of all fears, whether they be geopolitical or economic.
US President Donald Trump's trade tariffs and additional hikes on Chinese imports have sparked a global trade war, with China slapping further tariff increases on US goods. It's rattled currency markets and sparked fears of a spike in US inflation. Global central banks' policy decisions also influence gold's trajectory, with lower interest rates reducing the opportunity cost of holding gold since it pays no interest.
You can feel there's a lot of angst around what the trajectory is for the dollar, what's going on with interest rates, the impact of tariffs, higher prices that will lead to inflation, and that makes the task of central banks when they're trying to balance inflation risks against interest rates particularly hard.
These central banks also hold gold in their reserves, and recent demand has been robust because of the economic and political uncertainty. The World Gold Council says more central banks plan to add to their reserves within a year, despite high prices for the metal. Alongside simply purchasing physical bars and coins, there are other ways to invest in gold. Large buyers and institutional investors usually buy gold from big banks. Prices in the spot market are determined by real-time supply and demand dynamics. London's the most influential hub for this market, largely due to the London Bullion Market Association. The body sets standards and frameworks for trading among banks, dealers and institutions. Investors can also get exposure to gold via future exchanges. That's where people buy or sell a particular commodity at a fixed price on a particular date in the future. COMEX, part of the New York Mercantile Exchange, is the largest gold futures market in terms of trading volumes. China and Japan are also big players in the gold futures market. Exchange-traded products or exchange-traded funds issue securities backed by physical metal. It allows people to gain exposure to gold prices without taking delivery of the metal itself. Exchange-traded funds have become a major category of investment demand for the precious metal.
Well, my guest today is an economist and the Accounting and Finance Management Department head at Istanbul Eral University, Cuneyt Dirajan. Cuneyt, thank you very much for joining us. We do appreciate it. Let's look at this surging gold then. What's causing it, do you think? Is it fundamental, just regular market dynamics, or is there something going on here that perhaps is less obvious?
Hi everyone, first of all. I wish everyone a good weekend, first of all. Both of them. The answer is both of them. It is also on the fundamentally driven and also sentiment basis, both of them. Because we have a lot of reasons behind it. But let me remind you some, let me say, historical things first in the first rank, and after that we come to the today, for example, realities. First of all, those who are listening us now can look at the time after Mr. Nixon, the president, US President, Mr. Nixon decision one day at 1971 that he decided to crash the relation between gold and US dollar. And after that came the Smithsonian agreements. Okay, in 1974. And after that, we had the first Yom Kippur War between Israel and Arab countries. And after that, there was a revolution in Iran, and then Iran-Iraq War. So today, what we are living in general in financial markets and global economy is very similar to that time, that moments. So it is a little bit accelerated today because of the high technology, etc., whatever it is. But we are facing the same situation, the same scenario in general. So the price of the gold, the surge of the gold also is similar to that type of things because we have trouble still in, for example, Middle East, including all the region countries. So this is very similar, first of all. The second one, when we look at the figures, numbers of the World Gold Council, until today in the human history, it is known that in the statistics, it is given that around 220,000 tons of gold are now over the world, are now in our hands, in central banks, in the industries, etc. So from that figure, that number, around 38,000 tons are now in central banks. And from that amount, around 11,000 tons of gold are now in US Treasury. But in general, it should be on the balance sheet of the Federal Reserve System. So the third one that I should remind, in the financial markets, you buy the expectations and you sell the realization. That's the first. What is or what reasons behind it? First of all, in the first rank, Fed rate decrease decision. We have two remaining meetings, FOMC meetings, Federal Open Market Committee meetings, until the end of this year. The second one, the discussions around Federal Reserve System, which is the central bank of United States, including one of their governors, Lisa Cook, the fraud in mortgage, or so-called fraud in mortgage, made by a governor. Because of that, Mr. Trump is now attacking Fed, but not only from that reason, for example, because of they don't decrease the interest rate very fast, and this is not helping the US economy for the time being. Because of that, also he's attacking to the Fed. And also there was, and still there are a lot of discussions about the central bank, Federal Reserve audit, because of many reasons, including the gold.
And you mentioned the role of the Fed. You mentioned central banks there in general. Do you think that this rally, what's happened, in any way points to a sort of wider distrust in central banks?
Yeah, of course, because central bank independency, after the neoliberalism understanding, the Washington consensus put by US also, and we have on the other side the Chinese version of it, Peking consensus. Because of the neoliberal system understanding, central bank independency is very important. When we discuss about that type of, let me say, government, intervention on a central bank, even on the management side or for the rate hike or decrease scenarios, you are discussing the central bank independency. This is one of the main, let me say, item for the price of gold. But we have a lot of other, let me say, headlines. Like, for example, we will also discuss the France economy. A lot of European Union economies now are struggling on the budget deficit as well as on their economical side or economic system, including Germany, which are the main driver of the European Union.
And we're going to talk about France in just a second. It's very interesting that you've brought that up. Just for our viewers, I think there are two things that viewers I think tend to be particularly interested in these discussions. One is the causal relationship of things like interest rates, and the other is appetite amongst investors to move back to more traditional assets. Just give me your sense on those two issues.
Safe. Yeah, because gold is a safe haven in the human history, and nowadays we can also put maybe on the other side the cryptocurrencies, but I mean in that part the Bitcoin or Ethereum, that type of things. But of course, this is not an investment, let me say, thing that I want to say, but we can also discuss the cryptocurrencies, some of them. This is a safe haven. Because of that, also households in general or investors also are rushing towards gold. And also when you fear about economic recession in your country or in general in the developed country like United States, when you talk about stagflation, okay, or when you talk about wars, it might be the currency or trade wars like tariffs of United States nowadays, or the real wars like Ukraine and Russia or Gaza, Israel. So everyone, because of the fear of losing their wealth or their income, they are rushing in general to something physical, which is gold. Those are, in general, the main reason. And I think your question answer is, I can say, is related in general in the first rank or strongly for that reasons. Apart from that, for the stagflation purposes or fears, and also for the wars, hopefully we will not see any new war in the world history, but because of the maybe Third World War fears, also the governments or the central banks in general are rushing towards gold. For example, Turkey or Russia or some of the other countries like China or Saudi Arabia, they are buying simultaneously during, let me say, around last 10 years gold. And in Turkey, for example, it is believed that around 5,000 tons are in the hand of households. They are also heavily investing because of some other, let me say, social issues. They are also investing heavily in gold, like India, for example. They are also loving gold. And apart from that, United States tariffs, trade and currency wars, and also I can also include the BRICS, let me say, composition, or the BRICS financial understanding. Maybe in the near future, we will have, like IMF SDR, a new currency, BRICS currency. And if you want to make it like an IMF SDR, you have to put on the other side a collateral, which is a precious metal like gold or silver.
Very interesting indeed, the idea of a BRICS currency. You mentioned France earlier. Let's just go back to that. But this time, it's a slightly different story also, though, about confidence, but government policy rather than markets this time. While investors are turning to gold for safety, policymakers in Paris are also turning to ideas for stability. One of them is this so-called Zucman Tax, a proposal that's reignited, as we've seen, France's debate over wealth, fairness, fiscal reform. Just give us your views on this, please. Do you think these targets against ultra-wealthy households, from an economic standpoint, do you think they really stand up? Are they going to really make a dent in the deficit?
Yeah, that's not the story of today, first of all. So the problem that France is now living, or in general in the European Union, or in most of the countries' budget deficits, it is not the story of today. So there's a historical agenda behind it. For example, in the first presidency
they're
of
dealing
Mr.
with it.
Trump,
They're dealing with it though today, do you know, aren't they? And actually,
they are dealing
even,
with it. Yeah.
Even more so, they're being seen to demonstrably not be dealing with it, I think, which is causing a lot of attention. But anyway, please carry on.
Yeah, in the first, let me say, period, I tried to say that we have another financial or economic system establishing or building after Bretton Woods or Smithsonian. We have faced a neoliberal agenda around the world. And now, after the pandemic, after COVID pandemic, for example, self-sufficiency is becoming more important for every country. So at that time, most of the governments, because trying to support their industries or households, etc., they have to spend more money. Okay, so because they are spending more money, they have troubles in their budgets, like Argentina, like France. And today, for example, we are discussing for United Kingdom or France the intervention of IMF policies, for example. Or other solutions. So the financial system, the economical system all around the world is now transforming. That's the main problem. So this is not the story of today, or not only the France. But the second one, I asked that question. I'm also a columnist in some Turkish economic newspapers. At that time, around 7 or 8 years ago, I wrote a column, a paper, by asking, is the capitalism ending first, or is the financial system, neoliberalism is ending first, or is the European is ending first? That was the question around 8 years ago. That's why I'm trying to say that this is not the story of today. So in France, they have a lot of budget deficits due to the pandemic, etc., for other things. And the main problem of European Union, or the main problems, the biggest two problems of European Union is the population age. That's why, for example, immigration or refugees are now gaining importance all around the world, but in the first rank in European Union, because when you look 100 or 150 years ago, that was colonialism and imperialism. At that time, you find the capital cheap and you find the workforce cheap. That's why, because of that type of things, they have a lot of world brands. But now it is ending. Now it is a financial system all around the world also is transforming due to the technology and the new industrial revolution. So in general, European Union, and that is the same question or problem also in the US part, the government infrastructures like, let me say, energy, internet, let me say, education, health, they are facing a lot of troubles. They are not heavily invested in the, let me say, latest 20 or 30 years on that type of government, let me say, infrastructure. So they have to put money on that side. But because they have still problems in their budget deficit, they cannot do it. Maybe you can remember, or let me remind for the listeners, last year, Mr. Mario Draghi, the ex-European Central Bank president, prepared a report for the European Union Council. And in that report, they said that the whole European Union should heavily invest in that type of infrastructures in order to boost the economy, in order to reach the growth that they need. So if you cannot create jobs, if you cannot boost your economy, and if you are in a recession, which is the scenario of, in general, European Union, and also when we talk about United States, in the last FOMC meeting, for example, Mr. Powell, the president of the Federal Reserve, also politely accept that United States is now in the stagflation period. and which Mr. Trump is saying that it is more than 1 year that we are in the recession period. So this is the problem also European Union, and because of that type of questions or problems, you have to heavily invest, but you have a budget deficit. So you have to find money somewhere. Either you take loans, or either you take tax from your companies or from your households. That's the problem of France today.
It's a very difficult problem, as you rightly say, to solve. And the Draghi report, as you mentioned, obviously was one of the precursors to this competitiveness compass that the Commission President launched at Davos. So, I mean, some of the criticisms of that were not about, I think, the underlying points made by Mr. Draghi. They were more about the application of it by the Commission. Things, you know, more rules, more regulation, more standardization.
Yeah. That's another problem.
As if that wasn't one of the things causing the problem in the first place. I mean, what do you think are the chances of a ripple effect across Europe for you know, the popularity of something like the Zucman tax? Do you think it's going to be seen as something that other deficit-heavy economies might want to adopt?
The problem in general, and this is not the only problem of France and not only the European Union. For example, in Argentina, we have an elections at the end of the month, for example. Also, the Argentina people, or the problem of Nepal. This is the same scenario in Nepal because we have a lot of clashes last week in Nepal, for example, in the last weeks. This is the main problem. Either you find the money by collecting more tax from your households, from your people, or either you collect money from the companies, businesses, or either you create money which can create inflation if you are not productive enough, or if you cannot, for example, boost your economy more than the money, for example, supply. So it can also create inflation. This is not the case every time, but it might be. So, or either you borrow money, you take loan from somewhere else, from the financial markets. In the scenario of France, for example, the budget deficit is around 170 billion euro. 170 billion euro, which is let me say, gross domestic products, yearly economic, let me say, growth of some countries around the world. And when you look at the ratio, for example, the budget deficit against the GDP, gross domestic products in France, is 6%. In general, when IMF goes to a country, let's say, for example, nowadays Argentina, they put a target for budget deficit against GDP minus 3%. It means for France that you have now 2 times more budget deficit than should be in generally accepted. And the interest payment, when you borrow money, you also pay interest rate to someone else. It can be your citizens, or it can be somewhere else. And if it is someone else, it means that at the end you have another deficit, which means current account deficit or capital, let me say, movements. You have to pay more money someone else, and it is also a problem if it is getting bigger. The interest payment in the new budget of France is 53 billion euro, which is also a huge number. So the problem of today, France, they want to borrow, but on the other hand, because of that type of issues, they lost their credit rating. And their CDS also is increasing, credit default swap points, etc. Their risk also increasing. Apart from that, if you want to borrow, you give a lot of interest. If you want to take tax from your citizens, now that was your question, you can take it from your citizens, people, the household, or from the business. The problem in general, all around the world, in Argentina, in Turkey, in, let me say, France, or in many countries, the problem, business, because of the redemptions or tax supports of the governments, they are in general paying less tax when you compare with the citizens of the countries. That's the main problem. In Turkey also, this is the same case. So if it is getting bigger, then at the end, people are saying that why we are the only one who is giving the tax.
It's very interesting indeed. A huge amount of complexity at play here on both topics that you've discussed with us on the show. We thank you very much indeed, Cuneyt, for your analysis. Much appreciated.
Yeah, see you soon.
Gold's rise then shows investors still seek safety in the oldest asset of all, while France's new tax plan reminds us that governments are searching for stability in this modern age. Whether through markets or fiscal reform, the quest for confidence remains at the heart of the global economy. Well, that is all for this edition of World Business. Thanks for watching.